Hello, my name is Steve Bigelow with the Candlestick Forum. One of the best trend or market trend indicators is the T-line. As we saw in the markets this week, notice how last week they started to take the market back up. However, there was not one final confirmation in this uptrend, the T-line. And we knew that there was going to be a Fed announcement on Friday, or not a Fed announcement, but Powell talking from the Jackson Hole Summit. And there was no sense going against the risk factor that we hadn't seen it close, the markets close back up above the T-line. We wanted to wait to see what the reaction was. And obviously the reaction was they weren't going to close it above the T-line. So this would have told us that if we had positions on that were short and hadn't closed above the T-line, all we had to do was stay short and wait to see what the T-line reaction was going to be. So the T-line is one of your most powerful indicators, because if you understand the concept of candlestick analysis, which the candlestick signals are the graphic depiction of what's going on in investor sentiment, and the T-line has already been indicated as being a natural support and resistance level of human nature. When you combine those two facets, that if you see candlestick sell signals and a close below the T-line, you can stay short until you see a candlestick buy signal and a close back up above the T-line. Same scenario on the bullish side. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see that candlestick sell signal and close below the T-line. Again, this is on the premise that investor sentiment is what moves prices. And the T-line acts like a very powerful natural support and resistance level of human nature. This is something you don't have to take anybody's word for. Put it on your charts. See how often the price comes right smack dab to the T-line and goes the other way. This is very relevant whether you're trading the market indexes or stocks, currencies, everything. This powerful natural support and resistance level of human nature works, and the reason it works is statistically, nobody has this on their charts, which means they aren't waiting to see if it's going to trade back to the T-line. It does it naturally. That's why the T-line now becomes very effective for showing where that natural support and resistance level is. So on big stocks like Amazon, if they'd opened positive and started trading positive, that would have been a high probability indication the bulls were back in control. The fact that they're still trading these prices below the T-line tells you the probabilities are extremely strong. You're heading in a bearish direction. So when we look at something like Herbalife, look at your bearish best friend, gap down below the T-line. There was some buying on Thursday. Could have been telling us the 34 is going to act as support, but the fact that they're still trading below the T-line tells us this bearish best friend is working. So anytime we can see a strong signal, like a bullish kicker signal, and a close above the T-line, that's just double confirmation that that strength of that kicker signal is going to put you in an uptrend, or a bearish best friend below the T-line tells you that strength to the downside is going to keep you in a downtrend until you see a buy signal. Our recommendation on SBLK was based upon a dumpling top, staying below the T-line, and then notice what they did, that shooting star gap down. What is our expectation on a dumpling top? Strong downside, just the opposite of a fry pan bottom, where you see a fry pan bottom breakout, you expect a strong up move. So our recommendations on shorting Wayfair, notice it had potential of supporting here, but they still weren't able to get it above the T-line. That strong bearish kicker signal Told you there's a lot of force to the downside, which is being confirmed by that resistance level of the T line. So something like Peloton, look at your bearish kicker signal. This one can still be shorted on weakness on Monday. But that doesn't necessarily mean that every stock is going to be heading down in a down market. Now, we have the advantage of seeing which ones have the strongest probabilities of not only heading lower, but strong bearish trends based upon the candlestick signals. But that same scenario also tells us when things are acting strong in spite of the market trend based upon things that we know are very relevant as far as indicating when the bulls are taking control and when they're still in control. So obviously, and this is one that everybody's been trading in the chat room, because this has been trading stronger in spite of the fact that the market was selling off dramatically. So anytime we see things that tell us there's a possibility of a change of investor sentiment, we want to put it on our watch list. So the advantage of candlestick signals is they indicate when there's going to be a strong change of bullish or of investor sentiment. And that strong indication of bullish sentiment will still probably maintain itself even when the market's trading off with great strength. So the rationale is the candlestick signals and patterns still provide the probabilities of being in the right direction, even as the market is changing. In worst case scenario, it gives you a little bit more time coming out of a strong price move when the market's selling off, that if it's time to take profits, you can witness that with a little bit more identity to say, all right, we should be selling because the strength is gone, but it gives you more time to get out of a good trade. So the sectors to watch: the computer systems, you want to be short. Home furnishings, you want to be short. Lazy Boy, for example, your bearish belt hold below the T line. Look for more downside. Couple more that would also act well. And the computer systems, and that would still be shorting this one. Again, a few more to be shorting with bearish charts. So the logic behind candlestick analysis is just common sense based upon what the signals and patterns are telling us from what the Japanese rice traders have illustrated over the last 400 years. So try our 2-week free trial. The reason we let people come and look and see what's happening in our chat rooms and our recommendations is based upon common sense. There's nothing tricky about this. And even if you don't use candlestick analysis as your main trading strategy, if you apply it to the charts and use it in conjunction with whatever trading strategy you're using, it's going to dramatically improve your ability to see when to get in and when to get out of trades. Join us. You'll get much more than you think you'll get. That'll be it. We'll see you in the chat rooms.